Welcome back to another edition of This Week in 3 Minutes. I've called this one, Here We Go Again. We've all heard the old expression that history may not repeat, but it sure does rhyme. And what I'm alluding to is the very real possibility for another depression. Maybe they'll call it the Greater Depression. I don't know. I'm not using hyperbole here or exaggerating. I actually have the 5 primary causes for the Great Depression in front of me, and we're going to touch on all 5 of those, and I think you will find the similarities very, very unnerving and disconcerting. But before we get into the doom and gloom, I will share with you this, that one thing that is positive, that the Great Depression, the 1930s in particular, created more millionaires than the world had ever seen, and remains so to this day on a relative adjusted basis. So those who own gold and silver, I think, are going to do very well. Those who don't own any and rely on traditional investment strategies of a simple stock and bond portfolio, oh boy, good luck with that. I worry about your retirement years. So what were the 5 primary causes of the Great Depression? Well, of course, everybody knows about the big crash in 1929 brought about by easy lending and speculative investment and complacency, and stocks always go up and blah, blah, blah. And of course, the crash was just reality hitting them right in the face. Mike Tyson said everyone's got a plan to get hit in the face. So the second data point on the Great Depression was, of course, all of this speculation and lending led to bank failures, bank problems, people losing their jobs, inventory going up, prices all over the map. Everyone was very, very worried and stopped spending, just like what we saw in the first few years after the crash in 2008. People weren't spending, and of course that just made the situation compounding. So a reduction in purchasing power across the board as well as a result of this situation. Unemployment jumped to 25%. Things were getting terrible. And what was worse was the Republican government in the U.S. at the time decided not only was it going to bring interest rates down from about 6% down to 2%, sound familiar? That, by the way, stuck for 25 years. It wasn't until 1953 that interest rates move up. Can you imagine if we went 25 years at 2% interest rates? Well, they had wiggle room in the interest rates to move it down to help things out. It didn't. But what are we going to do now? We're already at 2.5%. I guess we're going to go negative. But yeah, so the Republicans decided to try and protect American jobs by instituting trade tariffs against their primary competition in Europe, and which, of course, there was tit for tat, just like we're seeing with the U.S. and China today. These are really interesting common elements. And the final and 5th point that was, I guess, the biggest one that stands out in a lot of people's minds visually was the Dust Bowl drought of the 1930s, leading to crop failures, bank failures, people losing their farms, and problems getting food. Well, we have a situation right now where the Mississippi River got up to, I believe, 41 feet higher than normal. Well, picture what that will do in terms of how wide the water spreads out from the river. And this is happening in flyover states, so we're going to have farms that cannot plant their crops this year, meaning a supply shortage in food, which of course always brings the price up. So, stock market crash, bank problems, people stop spending, retaliatory responses to tariffs, and horrible situation with regard to crops. If this isn't a dead ringer for once we finally get that big crash, and yeah, we saw a 470-point drop this week, that's just a taste of what's coming. So if you got gold and silver, maybe you'll be one of the new millionaires. If you don't, good luck. I think you're nuts. So on that note, have a good weekend.